Hello, everyone. My name is Andoni Almeida with BERYL Consulting Group, and I am pleased to be joined by Anthony Bassili. And in terms of who is Coinbase Asset Management, can you tell us about what conviction does Coinbase Asset Management hold that the rest of the asset management industry doesn't yet possess?
The conviction that Coinbase Asset Management holds that isn't shared across the traditional asset management industry is that on-chain capital markets are the alpha play now. And this is a very new technology. It's a very new primitive, but it's not new for us. It's been around for the last 7 or 8 years in terms of using protocols and using digital assets as a core part of your portfolio construction to generate excess return and add diversification. Now, the trend of adding Bitcoin to a portfolio, passive Bitcoin, has finally emerged. And what you see is major platforms like Schwab and JP Morgan and Fidelity, Morgan Stanley, and others have finally admitted that Bitcoin has a role in the portfolio. And they've done so by saying that you should have 1 to 5% of your total portfolio in Bitcoin itself. That's a big structural change. What they're missing still is the unique alpha opportunities that exist during this period of transition. So we are undergoing a major structural overhaul of how our capital market systems function. We're bringing credit on chain through stablecoins and stablecoin lending. We have dollar expansion, which is now global, not just isolated to the US and through their bank partners. And people all around the world are now participating in global capital markets. That's going to be a completely revolutionary new idea for investing that most traditional investment managers just technically are not ready for.
And shifting over to the alternative landscape, alternatives have exploded across private credit infrastructure and real assets absorbing trillions of dollars. Where does digital fit in that lineup?
So today, most allocators are looking at the digital asset space as an alternative. And they're asking this question of, does Bitcoin fit in my alternatives bucket? Should I be investing in other areas of this emerging technology primitive? If so, how do I do it? And so to date, most investors have participated either through venture, which is a private equity bucket. A lot of investors have participated in Bitcoin itself, direct passive allocations. A lesser amount have participated broadly across their tokens and other primitives that are on chain in this environment. Now, what's emerging from an alternatives perspective is, as I mentioned before, we think Bitcoin absolutely has a role in your portfolio. You can choose to put that in your alternatives bucket if you like, but we think it belongs in an actual carve out of store value as an asset class. The other category that we are building today is around stablecoin credit. So traditional private credit today is a really important part of the global financial system. However, we're already seeing cracks because a lot of the lending that took place in traditional private credit was done with asset-light companies that are legacy software businesses. And so they're predicated on the fact that old school software revenue generation is going to continue. We don't think that's the case. With the advent of AI, the fact that we now have things like Cloud Code, where individuals can build and design the software solutions that they want at their fingertips, right? This completely changes a lot of the exposure in traditional private credit. So we think a lot of traditional private credit probably has a lot of flaws in it and will be challenged going forward. Investors should start thinking about what is the next version of credit? How do they redeploy what was a credit allocation from companies who are being disrupted into companies who are doing the disrupting? When you think about the advance of stablecoins, which are now over $350 billion, and from a trading settlement perspective, stablecoins are competing with ACH, Fedwire, and Visa in terms of global volumes, now reaching over 30 trillion. The opportunity there is not just stablecoin settlement that competes with the dollars and banking settlements. It's actually credit. How investors should think about this in their alternatives bucket is, should I expect the internet of money to grow and there eventually will be billions of people using the internet of money? We think the answer is yes. Therefore, if people are now settling their money on chain, they're also going to want to settle their credit on chain. So that's what we're building with our funds. We're building with the blockchain technology integrated into real world applications, and payments and settlement and credit is a major piece of that.